When you start investing, initially you just buy stocks you know and like. But very soon you will hear that people talk about value stocks or growth investing. So, do you have growth or value stocks in your portfolio? What exactly are these? And most importantly, should you care at all? Let's find out. Hi folks, I'm Chuck and welcome back to the Access Corner, the place where you can find all the assets and resources you need to achieve financial freedom. And today I'm answering a lot of questions. And the first one is, what are value and growth stocks? First, let's take a look at value stocks. These are shares of companies that tend to trade at a lower price relative to their fundamentals, like dividends, earnings, or sales, or stuff like that. Investors see them as undervalued and expect them to increase in value over time, meaning that you buy them cheap and you expect them to increase the price with time. The stocks are usually stable and they have consistent dividends and with long history of performance. So let's take a look at this here so that you better understand. This is morningstar.com, which is actually not for free, but it will help you visualize what I mean. I'm in the screen right now, which is a place where you can find stocks with particular characteristics. And I go here and look for large value in the stock style with a rating of 5, and I get to this rating in just a second. By the way, morningstar.com, please don't sue me for showing this data. This is actually kind of a nice advertisement for you guys. You have to be super careful nowadays. So anyways, as you can see, there are 25 stocks which are value stocks. Why? Let's take a look. As you can see, the analysts of morningstar.com think that the fair value is higher than the current price of the stock. And if we go down, we can see that the PE, or price to earnings, is lower than 30. And the PE indicates how many years it would take you to earn back your investment in a stock at the current earning levels. So how they calculate that, we don't know. And that's the thing. It's called intrinsic value, which basically is what they think it is the true worth of a stock. And everyone calculates it differently. I will put a video in the future showing how to calculate intrinsic value of a stock. So, subscribe will show you when I put the video out there. But in any case, you can see that the value stocks are basically that. Stable stocks with a long history of high performance. And that now, because of the fundamentals, you might think they are undervalued. Now let's take a look at the growth stocks. And these are the stocks from companies that are expected to grow at an above average rate compared to the companies in the market. They often do not pay dividends because the companies prefer to reinvest earnings back into business. Usually these stocks are overvalued or have a PE higher than 30. And those are the stocks with high volatility, aggressive expansion, and super often they are in the technology sector. So let's go back to morningstar.com and look at large growth stocks. And you see the stocks like Apple, Arista Networks, which is a stock I highly recommend. And of course Tesla, which is categorized as a consumer cyclical because here in morningstar.com it's an auto manufacturer. Let me know in the comments. That's an interesting question. Is Tesla an auto manufacturer company or it is a technology company? So anyways, now you know what value and growth stocks are. But the question is, should you care? Per se, you don't care if you invest in value or growth stocks. What you care is which stock give you better possibilities of making money. And to find that out, we can compare the performance of both groups. Who do you think is gonna win? The old-fashioned value stocks or the new growth stocks? So to do that, let's jump again to the computer, but this time let's go to TradingView. And here let's look for IBW, which is an ETF that matches the growth stocks in the S&P 500, and IVE, which is an ETF that matches the value stocks in the S&P 500 too. And by the way, this comparison is assuming that dividends are reinvested, so that is fair. And let's adjust the scale so that we have everything in the same kind of percentage. And as you can see, the growth stocks outperform the value stocks. However, until 2018, the value stocks outperformed the growth stocks. And if we just take 2022, we can clearly see that value stocks outperformed the growth stocks. And although the growth stocks have outperformed the value stocks in 2023, if we scroll back to the beginning of 2022 until now, we can see that the value stocks outperform the growth stocks. And this is not surprise, this is just what we said. The growth stocks, they outperform the average stocks, but they're way more volatile. So in time of crisis, they go down. And when things are going well, bull markets, they go up faster than the value stocks. And this has to be super interesting to you. What's your risk profile? Are you okay with volatile stocks? Do you prefer stability? Do you want to use the dividends from the value stocks as a passive income? Or do you prefer the potential long-term returns from the growth stocks? By the way, now that I said long-term, let's take a look at the performance before even the year 2000. For that, I'm going to use the Russell 1000 Growth and Value ETFs, which tracks the higher ranking 1000 stocks in the Russell 3000 index. And these Russell 3000 index are the 3000 biggest companies traded in the US, meaning probably all the public companies you know. It doesn't matter if they are foreign stocks. If you can trade them in the US, then they are in the index. And now let's see all. For that, I had to take a chart from Y Charts from August 2023. And as you can see, they have been pretty similar over time. But with growth being more volatile as we had said, and actually achieving better returns over time. However, how is the annual return? And in this graphic, you can see above what we have seen. The growth stocks outperform the value stocks during bull markets, meaning when things are good, and value stocks have had a better performance during bear markets, when things are not that good. However, there is something interesting below. The all-time annual return for both are very similar. So what's better, and should you care? I mean, if you could predict the market trends, then this information will be valuable because you will invest in growth stocks in bull markets and in value stocks during bear markets. But the thing is, how can you know the trend? If it was so easy, it would mean that the market will break, because trading means that you buy something that someone is selling. So right in the moment of the transaction, one person is right and the other person is wrong. It's the nature of the market. So that's the thing. If it was so easy to know the trend, everyone would be right the whole time. But you can say, hey, I'm young and I have nothing to risk. So in that case, you can go for the growth stocks. Or you can say the same, I'm not that young and I want to have more stability, or I want to have more stability because some young people want to have more stability. I don't know. Maybe you can also say, hey, I need or want to take those dividends as a source of passive income, and then you will go for the value stocks. By the way, there are growth stocks that also give you dividends. Those are in this video here. It's called night dividends. Take a look at the video and you will see that this is possible to have from the both worlds. So let me know in the comments what kind of investor you are. Are you a value investor or are you a growth investor? And if you ask me, I actually have the portfolio approach. I will show you now. A portion of my portfolio are value stocks, and that helped me during hard times. And a portion, which is actually big, is growth stocks that go crazy in bull times. My portfolio looks like this right now. This chip gets updated when I buy something. And the defensive stocks here are actually value stocks. And then I have three categories for growth stocks. And then I have sensitive and cyclicals, which are things that change with time. So as you can see, I have around 45% of the stocks invested in growth and 20% in value. And the rest are the things where I keep a closer look and change depending on the macros and the trends. But for me, it's normal. I have a computer science background and I understand growth stocks and tech stocks. And if nothing happens, I still have like 50 years of investments in my life. And that's the key thing. You should invest in companies you understand and in a way you feel good about it. And to be honest, as you saw with time, the returns are pretty similar. So never give up and keep trying to be the best version of yourself. Check out.